Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Toast Inc. quarterly report. Toast Inc. offers a wide range of digital services for the restaurant industry, including software products for restaurant operations and point-of-sale team and vendor management, multi-location management, kitchen display system, mobile order, and pay catering and events, payroll and team management, supply chain and accounting products, back-office tools, such as plus accounts payable automation, plus inventory management, plus ingredient price tracking, plus recipe costing, financial technology solutions. The stock price of Toast, Inc. (TOSD) has experienced a significant surge of 27.61% over the last 12 months, driven by several key news events and strong financial performances. The company's robust third-quarter revenue growth, exceeding analyst expectations, was a major catalyst for the increase. Additionally, Toast raised its full-year guidance, citing improved performance in subscription services and financial technology solutions. The announcement of strategic partnerships with American Express and other major brands further boosted investor confidence. Analysts, including Morgan Stanley, have also expressed optimism about the company's future prospects, maintaining an overweight rating and raising their price target. These factors collectively contributed to Toast, Inc.'s stock price increase over the past year. The primary drivers of revenue growth for a company can be attributed to several key factors. The most significant contributors are subscription services, which have seen a substantial increase of 29%, and financial technology solutions, which have grown by 26%. On the other hand, hardware and professional services have experienced a decline of 10%. In terms of specific drivers, net income growth from -$13 billion to $241 billion is a notable achievement. Additionally, an increase in stock-based compensation expense and a rise in the weighted average shares of common stock outstanding have also contributed to revenue growth. However, there are some factors that may impact revenue decline. Seasonality in financial technology solutions, revenue can be influenced by level of gross payment volume, GPV, and regional variations. Furthermore, global events such as tariffs can affect consumer spending or restaurant operations, potentially leading to a decline in revenue. Net income and profit margins show significant improvement. The financial performance of a company has shown significant improvement in terms of net income and profit margins. For the 3 months ended September 30, 2025, net income increased by $49 million to $105 million, while for the 9 months ended, it rose by $254 million to $241 million. This substantial increase is also reflected in the improved net income margin, which jumped from -0.4% in 2024 to 5.3% in 2025. Profit margins have also seen a notable improvement, with gross profit margin increasing from 24.6% in 2024 to 26.3% for the 3 months ended, and from 23.7% in 2024 to 25.8% for the 9 months ended. The exact reasons behind these changes are not explicitly stated, but it is possible that the remeasurement gain of warrant liabilities mentioned in footnote 1 may have contributed to this improvement. The company is generating positive operating cash flow, with a significant increase in 2025 compared to the previous year. In 2025, net cash provided by operating activities reached $467 million, up from $213 million in 2024. This substantial growth indicates that the company's operations are producing sufficient cash to cover its expenses and investments, resulting in a positive operating cash flow for both years. The company's debt level has seen a notable increase from $863 million in 2024 to $957 million in 2025. This represents a significant change of approximately $94 million. However, the interest expenses have not been explicitly stated as having changed significantly. Despite this, the net interest income suggests that interest expenses may have increased, with a rise from -$9 million in 2024 to -$13 million in 2025. Management is optimistic about the company's outlook, citing significant year-over-year growth. They plan to execute their business and growth strategy by investing in sales, marketing, research and development, and expanding into new markets. The company will focus on operational efficiency and maintain a strong balance sheet while investing in future growth. Management expects financial technology solutions revenue to represent a growing proportion of overall revenue mix. There have been no significant transactions involving the acquisition of new businesses or assets by the company. Similarly, there have been no major disposals of existing business units or assets through divestiture. The company's financial structure remains unchanged in this regard. That concludes the financial summary for Toast Inc. Feel free to comment below, and I will be happy to answer them when possible.